Banking on Bitcoin. Can banks evolve and embrace? Germano, Arnò, Emoney. Stefan, HÄNEL, Payment World. Tim Frost, EQIBank.com. Priyanka, Lilaramani, PLINTH.TECH. Dimitris, Litsikakis, Revolut. Moderated by Joseph Borg, WH Partners.
So, as you can see, it's not exactly what you have seen there. So I'll briefly introduce Leonard, Bonello from GANADO Associates. I believe, Leonard, if you can say a couple of words just about your background.
So I am actually a banking regulatory lawyer who has now moved into payments and moved into crypto. So I'll be wearing two hats and I can play devil's advocate to my own arguments whilst we're here.
And Stefan should be somewhere close, and he will have his intervention at the end of the panel as well, to give us some insights from his side. So we have a very, very short panel, so and a very big one, so we have to rush into this. So traditional players in the financial services industry are threatened by blockchain and cryptocurrencies. Some are fending off this threat by fighting it, others are embracing it. What are your thoughts about this? Maybe the unicorn of the air could give us some insights.
So thank you for your question. I mean, for Revolut, we decided the latter. So we decided to embrace crypto. We offer crypto in Bitcoin, Ethereum, Litecoin, Ripple, and Bitcoin Cash. And it was actually the right move for us. When we introduced exposure to crypto, we saw an exponential growth of our users. That means that a lot of people took notice and used Revolut to buy Bitcoin and the rest of crypto.
Priyanka, you're an ex-Goldman executive and now you're in blockchain head-on, so
I think, Joe, we need to frame this discussion. What I'm seeing in the industry is a lot of two polarized opinions. You've got, on one side, people who are such fanatic believers of what's happening with cryptocurrencies and blockchain that they think it will replace fiat altogether. And then on the other hand, you have the critics who don't want anything to do with it. What I do think will eventually happen is through evolution and through maturity and professionalization of the industry and of the service, the banks and the cryptocurrencies are actually going to coexist and find a symbiotic relationship where your traditional fiat currencies or the traditional banking services will exist hand in hand with cryptocurrencies. And actually, Revolut, as you've rightly said, is leading the way in demonstrating that that can be done.
Leonard?
I'd like to take a bit of a historical analysis to it in the sense that
we don't have time for history, though.
No. But we've probably seen the past 10 years of the highest amount of banking regulation. So banks have all the time been caught up with looking and focusing at catching up with regulation and compliance instead of business generating, instead of new models, instead of looking at new technologies. And now probably when they're going to get a breather from regulation, they're going to have actually catch up with the reality that the unicorns in this world and the cryptocurrencies in this world are now a massive threat for their business operations. And now it's really going to be a question of survival for them. So they either adapt, they either make that leap, or else they're going to become extinct or much less relevant within the wider picture of things.
So as a cryptocurrency entrepreneur and someone who's now working with EQIBank, the first offshore licensed crypto bank, there's a lot of opportunity that's came up because the traditional banks that we've seen, the traditional giants, they've been very slow to adopt, and I don't think anyone's surprised. And banks such as EQI, they've seen opportunity, and they've been able to build infrastructure from the ground up, and be able to work with small regulators from offshore jurisdictions and small economies that are wanting to capture this opportunity.
Germano.
I think that we can stop the future. I think that cryptocurrency can be an opportunity. And all actors in this banking panorama, I think that must be embrace this new opportunity.
You're an Emoney institution, so I want to ask you this question. I want to take the opportunity to take this question. So, in the latest version of the regulations published by the MFSA, Emoney institutions, finally, because in the initial version they weren't, they are allowed to hold funds and users' funds with exchanges and funds collected from ICOs. Why are Emoney institutions able to be more friendly than banks to this industry?
But we think that, I think that Emoney institution must be more fast for changing business because we don't have a legacy system, legacy idea. And for us, we like to explore new market. We like to explore new business and new opportunity, as I just told.
What do you think, Dimitris?
I totally agree. We are much faster because we don't have a legacy system, but to build on that, it's also about the culture. So the banks have a different kind of, allow me to say, old school way of thinking, that they are not so fast to change. They don't embrace change as much as fintechs do. And this is a problem, and we see that everywhere, not just in crypto, but in any other technology. You open a banking app, and it feels like in the 90s, so they better do something about it.
But is it all their fault, or are regulators also protecting the traditional financial industry? Priyanka.
I think regulations obviously have a very integral role to play in this. What I would say, though, is the common theme here is we need to do more to educate the people who are in places of decision-making or policy-making. So I think when it comes to regulators, I don't know if some of their decisions are so much to protect the incumbents, but I think a lot of those decisions are driven from lack of full appreciation or lack of a complete understanding of what this technology is or what digital currencies are, and therefore how they can really be harnessed. And I think Roberta earlier made some really meaningful comments in that direction, that regulators do need to keep pace and have the right skill set in their teams, so to be in a position to actually make judgment calls. And at the same time, I think things like the VFA Act, Malta is definitely leading the way. So I'm not so worried about regulators protecting the incumbents. I am more worried about making sure that the key regulators in key jurisdictions are able to actually speed up their thinking and be pragmatic in their thinking.
Leonard, coming from the other side, from the dark side.
I think we've seen a breakdown of the universal banking model. So before you go to one bank and you get everything from there. Nowadays, switching banks means simply switching your thumb and moving from one app to the other. So the model of getting everything from one service provider is over. And you can get your home loan from one entity and your best payments or your best cryptocurrency exchange with a switch of a thumb and moving to your next app. And that is the beauty, I think, of the PSD and DMI regime, which allow you to focus on specializations and become optimum at that. In terms of attitude of regulators, really and truly, all regulators should be adopting more or less the same rule book. But it boils down to an attitude. So we know that, for example, BaFin isn't very happy to regulate electronic money institutions, whereas on the other hand, you have the FCA in the UK that is all the time advocating open banking, more competition towards existing banks, and it's effectively telling the incumbents, sort of, get your house in order. If not, these tiny guys will soon become much larger than you have.
This from Stefan's comment, who was discussing with us this matter actually in the internal email, right? So, Tim, what's your take on this?
Well, getting an opportunity to talk to many regulators throughout the world with many clients I've had over the years, they're moving, but they are slow, and I think this industry moves at a pace that they can't possibly keep up with, and so they are moving. They're open to change, but then this market. I mean, we've seen a lot of people get hurt in this year alone. So they're protecting I think even more retail consumers in the back end and where they've seen these stories. So they are open. I think they are changing, but this is just a process.
I have one last question, but I would like to address this to all of you. So how will blockchain, so blockchain wasn't created and Bitcoin wasn't created to be of any benefit to financial institutions, but how can blockchain benefit financial institutions? How can it benefit the users of financial institutions, and how it can benefit regulators? Dimitris.
So, in my humble opinion, this would go down to making transactions much faster and much cheaper. Blockchain can absolutely help on these two things. We know that it's crazy. In 2018, it's faster to get on a plane from London, travel all the way to New York to send money in a pile of cash, rather than just sending it through the bank. Blockchain can help with that and actually make it much, much cheaper, because there are so many fees around sending money, and yeah.
Okay.
I think definitely making it frictionless is one of the biggest benefits, but I think when it comes down to consumers, what I would envision seeing long term is reducing the cost of services. The amount of effort that goes into sort of operational elements of running a bank or being a bank, and all the inefficiencies that come with the archaic technology and the infrastructure eventually gets passed on to the consumers. Either that's because there's no more interest rates being given out by the banks, or because the cost of services is so high. So by bringing in technology like blockchain that works the way it does, eventually the consumer should benefit with more choices that are cheaper, faster.
I should contradict Dimitri. I don't believe that blockchain will become the payment mechanism or the payment software for it. But it will be the catalyst for a shift from the system of T plus 2 days, and it will become T plus seconds. And even the European Union has started a pilot project with, I believe, 9 EU member states, which is called Target Instant Payment Systems, TIPS, which nowadays is actually moving towards transfers within seconds, and it doesn't utilize blockchain. But even if it has just been the catalyst for all of this, I think that's already a massive, massive achievement which should be applauded.
Yeah, I think I kind of agree with the last comment. I think blockchain is looked at, everyone looks at how it's going to improve the financial sector, but I don't think it necessarily has to be a blockchain. It's just a better transfer system. I personally don't think without the utilization of a token, it can truly be a blockchain. So I don't think, in my sense of the word, I don't think a blockchain will ever truly be integrated into the financial systems.
Germano?
I think that the blockchain is the key source of for the future. For the future, yes, for the market innovation in banking, because it's possible to create immutable transaction, and it's possible that all person that participate in the network can see everything. It's very clear. It's very easy.
Okay, I need a roaming mic for Stefan, who would like to make a comment.
Well, okay. Well, I don't want to make it too long, as you have some time pressure here. Well, while we are enjoying ourselves here, feeling fancy, hip, being on a blockchain conference, for example, one of our main banking partners, UniCredit, has just launched its blockchain-based trade finance solution. Yeah, so for all the letter of credit, or standby letter of credit businesses financing export businesses, or the big use cases. And even last year, so a year ago on Money 2020 Las Vegas, OpenBank, subsidiary of Santander, launched their online, completely new developed online bank. So banks are catching up. They're sometimes leading the process, but they're looking into the big money. So where we not earn 10 million, 100 million, whatever, but where are the billion businesses? So we should not underestimate them, yeah, but they will look with a completely different approach into that. So therefore, be careful.
Any time for one last question from the audience? Okay, so thank you very much.
Question this.
Question over there.
There is a question.
Okay.
We need to be fast.
Thank you. Yes, it's a good opportunity because you're talking about banking. I don't know if you know, but for example, in Poland, you can transfer money from bank to bank within 5 minutes. So there's no blockchain involved. It happens almost instantly. You mentioned a bank that recently opened in US that is only online. So again, in Poland, like I can't even remember when there was a bank that opened only online without any physical presence. So you can see that there is a lot of things that blockchain cannot provide these days. Like, for example, how would you, in terms of cryptocurrency, how can you fund, for example, a building of a house? Can banking based on cryptocurrency provide such services these days?
Unfortunately, we don't have time to answer the question because we need to conclude. But I believe hold is actually hold of Priyanka is actually the solution for that. I suggest you research their project, and it's basically a peer-to-peer lending system with cryptocurrency being used as collateral. So I'll let you,
Come
Priyanka,
find me.
discuss. Thank you very much. Great
Thank
panel,
you.
and I'll see you later.
Thank you.